This will be the end. I'm your host, Steve Van Metre, and thanks for joining me today. And in our lead story, I want to talk about Putin's latest plan to end the US dollar's dominance as a global reserve currency. And if he is able to pull this off, and with China, he's got a reasonable chance of doing it, it will completely change way of life for the United States, as it will devastate our economy. I also want to talk about the U.S. housing market today, because there's a lot of indications that it's rapidly slowing and what that means for the U.S. economy. Now, as the global reserve currency, the U.S. dollar is used in trade throughout the world. If you want to trade, there's a good chance that you're using the dollar at some point. Now, we know throughout history that no reserve currency lasts in perpetuity, and the dollar's days, just in history terms, are even numbered. But can Russia and China accelerate that and get everyone to change? Well, they can. There is actually a path here, because if you think about the dollar, when it's conducted in trade, the U.S. really benefits in a huge way, because we take effectively paper and trade it for tangible goods. So if you think about it, we go to Saudi Arabia and we get oil and they get dollars. Well, which would you rather have? We can go onto the commodity markets. We can buy food. We can buy energy. We can buy gold. We can buy electronics. We can buy all kinds of things. And our trading partners are left with dollars. And what do they do with those excess dollars? Well, they buy U.S. debt. And again, you think about what you'd rather have long term. Of course, tangible goods are really more valuable. So you think about what's going on here. If they can change this, if Russia can get everyone to shift from using the dollar, well, it would have serious repercussions for the U.S. economy, because from a standpoint of trade, all of a sudden, people are less likely to want the dollar. And you think about it from an economic standpoint and a fiscal standpoint, we won't be able to run these massive deficits, which means we'll have to bring our fiscal house into order, and that will lead to a massive slowdown in the U.S. economy. Now, the question is, can Putin pull this off with China? Well, the answer is they can, because you have to have something people want. And Russia has something. They've got energy. What about China? Well, they've got gold they've been stacking up. Oh, that's right. Russia, they've been buying up a bunch of gold too. And if you think about it, and you look at trade, what they're trying to do now is convince people, would you rather have dollars, or would you rather trade with us? Let's over to the Wall Street Journal where we pick this up, because I want to go back a little bit and set the stage here, because it's important we see kind of their long-term plans of how they're going to do this. Russia's gas production and exports sink under sanctions pressure, as Russia's natural gas production will fall 12% this year and its exports decline by about a quarter, a high-ranking Russian official said on Monday. Russia's energy exports have faced pressure from international sanctions and efforts by Europe, which has long been a top consumer of Russian gas, to limit purchases and the prices paid to Russia for oil and gas. So you see what's going on here is the first step of the plan is we've got to hurt Russia. Now you think about, these wars, we don't like to shoot at people much anymore, but the first step here of what you're seeing is Russia's economy is highly dependent on the export of energy. So all of a sudden the world is saying, hey, we don't want your energy now, or we don't want it as much, and we're only willing to pay so much to get it. And what we're trying to do is stifle their economy until, of course, they back out of Ukraine and go back to whatever life of normal was before. So we're trying to hit them economically, and this is important to understand, because now let's look at the response we see from Russia. Mr. Novak said separately on Friday that Russia could cut oil output in response to Western pricing caps instituted earlier this month by reducing its production by 500,000 to 700,000 barrels a day, which he said was a 5 to 7% reduction in capacity by early next year. So here you see both sides, kind of West versus East, kind of going head to head, and this is all about whose economy you can crush the fastest. If we can bring Russia's economies to its knees, that stops the war machine. And if they can bring the Western economies to their knees, who are dire need of energy, and particularly cheap energy, because if you think about it, and we look here at the data, particularly in the crude oil market, what we can see throughout history is periods of high energy prices or rising energy prices are usually followed by a recession. So here in this chart from the St. Louis Fed of West Texas Intermediate, we can see the crude oil prices in blue you see here rising in the early 90s, and there's that shaded gray area indicating recession. Here we see going into the dot-com bubble, high energy prices eventually lead to recession. How about the great financial crisis? We see rising energy prices and even spiking into the recession. Now in 2012 into 2015, we didn't get a recession, but you may remember the global economy was rapidly slowing, and if it wasn't for that decline in oil prices, we probably would have had one. And now we're facing it again. Here we'll put a question mark over here. It's just how soon is the next recession going to happen due to that spike in oil prices? So you get the game now. Now, how does this shift into changing people using the dollar? Well, the goal here by Putin is to convince people the dollar isn't something that you want, because again, you think about it from the U.S. perspective, is it gives us a lot of power, not just in trade, but if you do something we don't like, we can just cut you off. We can sanction you. We can cut off your ability to transact through the global banking system. So if you're using dollars, you are at some point perhaps bowing to the U.S. at some level. And so what Russia now is going to position and say, look, see what's going on? You still need energy. You still need to conduct trade, but you don't want to deal with them? Well, come to us. As Russia reportedly wants to further cut its dependence on the U.S. dollar by buying up Chinese yuan on the currency market. Russia will start making purchases of yuan on the currency market in 2023 if the country's oil and gas revenues meet expectations, with a potential move by Moscow aimed at further reducing its dependence on the U.S. dollar and Western finance. So what you're seeing here now is the first step of this plan is that Russia's got to take some other currency. And so, of course, they're going to take yuan. Now, why would they end up taking yuan? Because, well, not a lot of people want it. But if you think about, if you remember what China has done recently, is they've set up an exchange to swap yuan for gold. So they have, if you have excess yuan, you can go swap and get gold. And we know, of course, Russia likes gold. Whereas if you think about the dollar, if you have excess dollars and you want to do something with them, well, you can't go to the U.S. and get gold, but you can go to the U.S. and get debt. So you think about what someone might rather have long term. Would you rather have gold or whether you have U.S. debt? Well, the gold becomes pretty attractive. And Russia in February stopped intervening in the currency market after its use of foreign exchange reserves was restricted by Western sanction following Moscow's invasion of Ukraine. And Russia has since accelerated the shift towards China's currency as access to dollars and euros has been limited. And we now see that the yuan share of the Russian currency market has risen as much as 45%, up from less than 1% as the start of the year. And so if you want your currency to be of value, you have to get it used in trade. And so now all of a sudden we're seeing this move to perhaps put the yuan in a strong position. But your question maybe is, well, how does that transmit back to Russia and their ability to perhaps get rid of the dollar? Now remember where we started. They've got something people want, and that's energy. You drive energy prices higher, you crack and break Western economies until they say, hey, you know what? We don't want this anymore. Maybe we don't want to deal with that dollar anymore. We're going to go out on our own and just start trading directly with Russia. But in order to do that, now you've got some limitations. If you want Russian energy, well, you've got to pay in one of two ways, either gold or yuan. And now you're starting to see how Putin's putting his plan together. As Putin attempts to undermine oil price cap as global energy markets fracture. The price cap was introduced on December 5th and requires traders using Western services such as maritime routes, insurance, and financing to pay no more than $60 per barrel for seaborne Russian oil. Urals crude is currently trading around $50 per barrel. In Putin's decree on Tuesday, that from February 1st, it would stop crude oil and oil products for 5 months to any nation that adhered with a cap, with a separate ban on refined oil products to come. And so here you see, the beginning salvo of his plan is to say, look, I'm going to cut you off. And if you think you can go get enough energy elsewhere to run your energy intensive economies, well, good, go do it. But guess what? There's probably not enough energy out there. That means prices are going to spike. That means your economy, as we've shown throughout history, is likely to face a recession or even a protracted recession, because consumers, of course, will have to redirect more of their savings and income into energy. And so now you see the plan. Hey, I'll cut you off. We'll just see how things go in 5 months and see if maybe you're willing to rethink your plan. Bob McNally of Repeated Energy Group told CNBC that he thinks that prices are going higher, and the ban on Russian oil would be the most significant factor impacting supply next year, and what he thought presented a completely new scenario. He believes the market is ending a roughly 7-year bust phase that was characterized by oversupply and is in the foothills of a new multi-year boom phase that will see stronger than expected demand. He said that will play out amid big geopolitical and macroeconomic uncertainties, and OPEC Plus will struggle to balance the market. So here you can see that experts are saying, look, we already don't have enough energy. We don't think Saudi Arabia alone will be able to balance this out, because they're the biggest player, of course, in OPEC Plus, and that will turn to Russia, who's going to again say, hey, you can't have our oil here. And now you start to get what a big price spike means, and how an increase in prices changes how people decide to spend. It changes how countries will even look at the market and say, hey, you know what, we need to get energy. Maybe there's a better way. As Russia bans sales of oil to countries imposing price cap. Now let's dig a little deeper. We're going over the Wall Street Journal here, and they say how Kremlin views oil contracts and how broadly it provides exemptions will shape whether it creates a major disruption to global markets. Many of Russia's crude exports are now selling at market prices well below the $60 cap, primarily to countries like India, China, and Turkey that haven't agreed to join Western sanctions. If Kremlin decides to curb oil exports to non-Western buyers, it could reduce global supply and push up prices. If only the Western countries that crafted the price cap are targeted, the impact would be much more muted, since they already have banned most Russian imports. And so now you see the carrot. We have energy. We have gold, we've got China, they've got gold, they've got yuan. So look, you come trade with us. You need energy, we will take yuan or gold. We'll give you all the energy that you need. Now you don't want that yuan, and hey, we don't blame you. Head over there to China's gold to yuan exchange and trade that yuan and get gold. And now look at what's happening here. You see the stability of the system. It's not based on yuan, whereas the current system is based on the dollar. It's based on energy and gold. And now you can start to get perspective here. If the Kremlin can pull this off, if Putin can make this happen with his buddies over in China, you can see that other countries might start being interested in the dollar, particularly as the U.S. continues to run up massive deficits in debt, and they start turning away from that. And of course, that will hinder the U.S. economy in a major way. The question will be is, does the world want more energy and gold, or will it want U.S. dollars? Let's take a look at the housing market now, because we're seeing slowdowns in the U.S., and this is a big impact for the economy here, because remember, housing is 20% of the U.S. economy, and where the housing market goes, the rest of the economy follows. As U.S. home prices tumbled for the 4th straight month in October, and this is really bad news, because we can go back in history and we can see that we didn't see a prolonged contraction in home prices back since the great financial crisis. We saw a small one when we were facing a double-dip recession, but since then, home prices are rising. So this is an indication that the U.S. economy is slowing down, and that could lead to a lot of people out of work. And then adding on to that, we have U.S. pending home sales crashed by the most on record. Keep in mind, pending home sales are houses under contract that haven't closed. Existing home sales crashed, but new home sales rebounded in November, which leaves today's pending home sales as a deciding vote for just how apparently dismal the U.S. housing market really is. And the decision is the housing market is in trouble as pending home sales tumbled 4% month over month, and October's drop was revised even deeper. And here you can see on a year-over-year basis, it's down 38.6%. And these month-over-month numbers are starting to build up. And you can just see the impact this will have on the U.S. economy in terms of people who income are tied to the housing market. You have realtors, you have appraisers, you have title companies, you have all kinds of people, you have companies that provide, furniture, electronics, all these things that people buy when they buy a new home or move into a different home, and you can see the impact it's going to have on the U.S. economy. But one thing this may not help Putin with is, well, if the U.S. economy goes in recession, guess what happens to our demand for energy? Well, it goes down in quite a bit. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.